Well, Facebook will release earnings after the closing bell today, and joining us to preview those results is Ivan Feinseth, Chief Investment Officer and Partner at Tigris Financial Partners. Ivan, thanks for joining us in studio today.
Thank you.
What is the biggest thing you're looking for from Facebook?
Well, first of all, I want to see an increase in revenue, an increase in advertising-driven revenue, but most importantly, you want to see an increase in user engagement, especially mobile-based user engagement. And you want to see that continually grow.
I'm sorry, go ahead.
And see that some of the investments that they've made in some of the acquisitions, like Instagram, to continue to pay off. And
talking a little bit more about user engagement, I know I'm looking here at the analyst consensus numbers, looking for a total of 1.53 billion monthly active users. Of that, 1.36 billion coming in on mobile. Does that sound about right to you?
Yes. Okay. That's a nice increase over the prior quarter. So you want to keep seeing, stair-step increases over each quarter.
And let's talk a little bit about the company's spending, because I know that's been in focus in recent quarters. We've seen them spending more on mobile businesses, WhatsApp, Messenger. Do you think these are good investments, bad investments?
Absolutely. I like the fact that almost each acquisition they've made, people say that was a stupid acquisition, and it's turned out to be a brilliant acquisition. Also, they continue to generate a lot of cash. I don't think they're ready to return cash to shareholders. I think they have to keep reinvesting in their business. So I want to see, I like companies that invest in R&D, that invest in growing their business. I mean, Wall Street seems to want to penalize companies that invest in the business, but especially tech companies, you have to keep reinvesting, because you can be passed by so easily.
And let's talk a little bit about ad revenue. What are you looking for in terms of that metric?
I don't really focus on specific measurements, because we don't even look at earnings per share at our firm. We focus on economic profits. We want to see a continual rise in return on capital. So as long as each incremental investment over time returns a greater return, that they have a rising trend to their return on capital over time, that will drive the share price higher.
And we're talking about a company that is closing in on a $300 billion market cap now. I mean, it's just grown gangbusters over the last couple of years. What is your take on the stock right now? Is it time to buy, depending on the results this afternoon?
Well, we have a buy on it. And the one interesting thing, for the past few quarters, they've reported great numbers. We've been very happy with the results, and the stock has sold off, creating a buying opportunity. Last quarter, they had the results to me were phenomenal. The stock was around 95 when they reported. It went down to, I think, around 88. Which again created a buying opportunity. It's come back. It's now 103. I think if the same pattern happens, it creates a buying opportunity for investors.
Great. Ivan Feinseth, thanks for joining us today. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.